And away we go already with another live harmonic pattern podcast on a happy Halloween. What's going on, everybody? Great to see all the folks into today. Get started right here, right now. Let's talk about some spooky harmonic patterns today. Patterns that should scare all of us. Yeah, what's going on, Frankie? What's up, Vegas? Rogelio, Victoria, Cactus, Miss Stephanie. What's going on? Everybody else, welcome. We're here Tuesday, Thursday. Do our harmonic pattern podcast again. Everyone, get over, become a basic member, and get with the software. Why? Because we're going to show you the patterns that do all the work for you. So get with that. Start with the TradingView. Send your TradingView username to hpc@sr-analyst.com. All the rest of the information is there for you to enjoy for free. And any other questions, get to me on Discord. Let's get that out of the way. Let's get to this. Let's get to what's happening because, you know, you got what's his face, probably doesn't even deserve to be named, speaking today, and all the other craziness, scariness going down. That makes it, you know, a spooky market environment. It's really, it is one of those times. It is absolutely one of those times. You come into the market, yeah, you want to look at the patterns, you want to look at structure, you want to analyze what's going on. The feeling of it, it's got me. I don't know if it's got you, but it definitely has crypto. People are spooked into crypto, and I think you're seeing that. Here's NVIDIA. I popped this up because of the massive head and shoulders. I've laid this out before. Now, with the break under 400, this is just one example of things that have me guessing that this is probably something larger poking at it, where we have to pay attention to not only the short term but the long term. NVIDIA here, you know, it's long term distribution, head and shoulders after a maniac run. But, you know, this is just NVIDIA. Okay. Within the pattern perspective, this is the kind of thing we're going to get to. And really to get insight on what the larger market is all about. So check out that bat pattern. We did one, it did a two. But now, what's it going to do? Because we failed the hop at 389, forget it. That's really, we give patterns their time limits and their price limits. And that's all within that realm of possibility. But we've seen the movements and no follow through. I mean, that's fine because type 1 reaction, type 2 were pretty clear. But development into something larger doesn't look like it. If anything, you're rolling over. Why I'm showing NVIDIA is because it was the favorite of so many people for so long, and it's probably going to be the first one to really give it up if that's the case. And I mentioned this a long ago. I think it's just from a harmonic perspective. If we're looking at NVIDIA for insight into other markets, you know, it's as simple as a 1618 all time. I mean, that was like exactly to the high. And now we just do a 382. And that 382, that larger 382 is, it's more like 350. So, you know, these kind of things, when we're trying to piece together elements of the market, and I look at stuff, big stocks like NVIDIA here, let me do that, something like that. This is just mechanical. And understanding how market movements happen, you have to have a, you know, you have to go up to go down, you have to go down to go up, vice versa. We hit that 1618 inflection. turned on a dime, rolled over. You're about to do a 3 month, a monthly, 3 month breakdown, 3 bar breakdown on the monthly. That's kind of spooky. Um, Other things should spook you. Well, let's go to SPY and Qs. We'll jump to crypto in a minute because it seems like people are getting scared into crypto, but not so fast. Plenty of time on that. But here's our SPY deal. And SPY, since really not only today Halloween, but from our perspective, it's the end of the month. And these monthly candles are doing things that we have to respect. That, SPY's doing something here where you're 3 months down in a row and you're breaking 1, 2, 3 bar range here, which seriously caps your resistance 422. So be aware of what's going on with all of this. It is, we know like the SPY is, we've talked about it. You got a whole bunch of different things that we could look at. It's a bat at the T1 here. Beautiful, beautiful. Okay. And possibly getting a dot on the weekly coming out here. It's also, let me show you this, because the reason why you're not seeing the smaller crab is because the larger bat has taken shape. I mean, that's 452.95 was the all-time 886. That could go down into a textbook. I mean, that's textbook type 1 bat pattern. But what we know we need to see to end that correction, stabilization, yellow dot. So we generated T1 dollar sign there. We also have, remember, we've got a whole bunch of different things here. We had a type 2 crab pattern. We have another bat pattern. I mean, that's reason why it's showing a bat pattern right now is because it's a larger structure. We got to get back and show that crab really quick. Bring it back into here. There you go. So 411, we know that target 1 off the all-time crab as well. This deep crab, all of the numbers were sitting right there. It's just, it is on a razor's edge. So how should we be thinking about this? Well, first of all, there's always plenty of time. I'm not saying go get crazy, not enjoy yourself today, but let's think about from now until Christmas, now till the new year, because we're in this phase where you're on a razor's edge. You have to turn on a dime here. So old what's-his-face has got to talk today. He's got to say some stuff that's going to bring up the market and basically put some kind of floor at 412. But just like I was saying a few weeks back that I thought on the Qs, if we cracked the 351, we'd go straight to 336. It's the same kind of a deal. It kind of triggers. It's like that game Lincoln Logs where you pull out a log and you build it up, and then you try to pull out the logs, and like every little piece, whoever's the one that pulls out the piece where it collapses on itself. That's what it reminds me of currently. Like we fail these lows currently. We fail these levels, 412, 411 on SPY, and you print like 409. Forget it. You'll be back at 400 in a heartbeat. That's what's at stake. Not to mention, yields, which is, I think, I don't know. I kind of understand that yields, yields definitely were suppressed, artificially suppressed for a decade. But now, what do we have? Because you're out of time. We have the bat pattern up here on the 2-year, and I think the 2-year is still definitely the one to watch. It's a big bat pattern. up here, folks, that hasn't rolled over. And that's just building in this series of little brief retracements. And it's like this, you thrust up, you get confirmation, you come back like a 618, another one, back down 618, back up 618. You see that? Those little zigzag movements, but at clear harmonic levels, okay, indicative of something coiling, spiraling in a constructive way where that's not rolling over. I mentioned this last time, and I think it's something that will become pretty soon. Everyone's going to become a bond expert, in my opinion. People are going to, one way or another, going to have to learn about bond vocabulary and the significance of bonds in general. And I'm still going to wait for the 5:30 breakout before I give the siren call for a crisis to befall us. But that's it. It's 5:30, and I said this to my group. I guess it was yesterday. I'm just I've had a few issues myself lately. Just still getting a little bit over a trick or treat flu, I guess I got from my son. But this is the deal, and this is what everyone should be really eyeing up closely. You want to see yields top out here, okay? So that's why today's so important. And I'm not a fan of any of those people. I don't think any of us are a fan of all these Fed officials and everything that they've done in the last, especially the last 5 years. Quite amazing. But you're looking at razor's edge here, and you're looking at something where things will change if you violate these levels. What we should be thinking here could dramatically shift up into this range. And I want to bring out this chart. Where is it? The quarterly chart? I think it's the quarterly chart on the 10-year. It was 10 or 30 year. We have super long-term dynamics that are happening that a lot of people aren't really aware of. But I think when we have the software doing the work for us, and this is why you should have the software, frankly, so that you can see these levels. It's not just randomly plucked out of the air. It's like a framework. It is a framework. It's a framework you lay against the random action of the markets here, where we have a couple of things that we have HSI coming in, supposed to be resistance, but we're blowing right through it. We would still need, this is a quarterly chart, by the way, going back. This is the one. This is the one I showed yesterday, I think. Went into that with my crew, but wanted to show everyone just even long-term dynamics here. That's a whatever the zero rate policy was last decade. It was just a full cycle, a century harmonic reset. We reset amazingly. We finished a cycle going back to the Depression. We actually took out the lows of the Depression, which is remarkable. And now you're in a reactive move where target one on the 10-year yield above current levels. So we see this crack, we go to 8%. And that sounds crazy. But that's what you need to be kind of keep being mindful of, that you don't stop here. You get above 5.3. You shoot to 8, and then that will trigger a whole bunch of various situations. We see it in the charts. It's kind of the problem with the longer term charts is, as a trader, it's tough to be patient with how it breaks down or how it unfolds. It can take time. You second guess yourself. Yet it moves. It kind of slowly trudges its way to get to where it needs to go within the harmonic pattern framework. And clearly the hop level at 105 right at COVID low was it. That was it. Went to zero, but that's it. So what's happening there? What's happening in the broader markets? Even we see market today, pretty much nothing burger, QQQs flat, SPY flat, all waiting on this guy. This guy, what a, whatever. I'm not going to go there. But huge significance, and we see it in things like XLE. And look, this is monthly stuff. Monthly, it's quarterly, it's big long term charts. Let's go to the monthly XLE. Okay, look at this. So, and I've talked about this for a while. XLE, crude oil. We know the deal about crude oil spot price itself, but the stocks are a different creature specifically, and they are really scraping this. I mean, you're scraping the top end resistance. Is that a potential short? Absolutely. We talked about that. $91 being the ceiling here, and we get a cycle, to implode. Then you come back to target one, which is kind of unthinkable levels, and we saw the breakdown in one of my favorites, which was Chevron, and it is what it is. But let's get in front of it. Let's not hesitate. What's going on? Everybody's getting in there today. What are you guys doing? You guys out trick-or-treating? Seems like we got a whole bunch of late people, but welcome. What's going on, Evan? APV, Cactus, Justin, Neeral. If the Fed doesn't raise rates tomorrow, shouldn't we start reversing? Not necessarily. Not necessarily. We've got to look at the charts here because you've got things like this. You've got a lot of charts looking like this, and then you've got other charts where you're just devastated. I mean, stuff like, in the Dow, where did I want to go? Let's go to the diamonds. All right, because the diamonds long term look like this. Now, let's look at, there's a big daily pattern that did bounce right off the hop, something we've analyzed. It's a butterfly. It's a perfect type too. Okay, it's a non-confirmation, but that's a perfect one too. It also sets up the exact low where you take that out, folks. This pattern fails, and then you just reset to your lower levels. And that has to be the floor. You have to be looking at the floor. And I'm not convinced. I'm not feeling it. I wish I had confirmation down there. Looks like this. No HSI. We do have a couple things with amplified and standard RSI. All right, I like that, but our level of tolerance has basically been shoved down into the last 2-day range. So you take out that bar at 323, that's a failure. That's a failure. That's why everything it's such a tight environment where you cannot give that any more room. So be aware of how critical this is. Even if we were to get a relief rally, I'm not totally convinced that this has been formally confirmed the way it needs to be. So I'm more interested in following those charts that have the clear confirmation and with not so much of the gyration, static kind of go nowhere range. Here's there you go. There's your longer term chart on the diamonds, the weekly. Trying to hit, listen, you are on the weekly basis, you're trying to register a few oversold readings. But again, it all confirms what I'm saying, that your tolerance for more downside is at its limit. Just know that. and we'll deal with the consequences if they come, and there'll be plenty of time to really capture it. You've given it. We expected this pullback ever since July, even early August. We could say at the latest where we really got on it. That we knew this thing was coming back on a type 1 SPY. There you go. Weekly. It's a bat. It's a few things. But we knew that at least SPY, the 411 range, has been what we've been looking at all along. But we need to see this thing now turn. And it's been, lacking the real constructive behavior until really yesterday was your first day where you popped out. It's maybe it's becoming more. I'm not quite there yet, but I'm now looking at this every day because it's only going to take this is a 3-bar range. Under 410, like I said, 409, then this larger scenario is going to have issues. Let's take a look at the Qs. Okay. A whole bunch of different things going on here. It's a bat. No, actually, this was the crab too. Let me just remove. It's the reason why it's showing the bat pattern is because that's the largest. It's really about this. There you go. Sorry. It's about this 1618 extension. I don't know why. Oh, it's because it's a bigger. That's a bigger structure. Hold on. Take a look. Remove that butterfly. I'm going to have to look why that defaults that way. It's still about this 1618. Okay, and that 1618 really capped it. Trying to put in a yellow dot. You do have an HSI 335.90. I think it was 336. Generally, I was saying all along is target 1. You're not down there just yet, but scraping it. So let's see what happens today and tomorrow. I'll tell you this. If you don't hold right now and you start rolling over, you take out last week's low, yeah, it's a straight shot to 336. Nothing can change it. I don't know why that happens, but it is just kind of the harmonic natural reaction. When you get up there, you do that 1618 and you come back to a 382, that there's some kind of natural reactive minimum about that. I would have been a lot happier to see this at 336 and doing what it's doing here. That might have been a better spot, but not so fast. So let's see how we shape up into Friday. What's up, Frankie? Frankie's saying, what do you call a chicken that haunts your house? I don't know. Frankie, you're going to have to answer that for me. Let me know what that is. Here we go. So the Qs, let's dig in. Let's look at Microsoft. Good old Micro Squish. Real strong earnings. Right back 336 area, 340. We got a couple dots we're dealing with. So if we don't follow through here, we got issues. Look, it kind of reminds me of Netflix. 1 second, folks. Wait. Give me 1 second. Okay, thank you. So I'm looking at Microsoft, much like I was looking at Netflix a month or so ago. Is that a short opportunity up there? Because if we do not follow through this whole distribution phase, go to the weekly. Looks like that. It's a shark. It is a crab. Okay, again, software is going to kick out the biggest pattern possibility. Currently, that's a shark, but even if we take off the shark, and I really love the crab, and people ask me, what's my favorite pattern? It's the crab. The crab because it has the 1618 dynamics. We know that you hit a 1618, a clear 1618 with the 5-wave structure, you're going to see a reaction. That's what that is. But here, okay, 339.79 has rejected a few times. So be on alert. Daily time frame, just trying to hold, trying to go higher. And Microsoft, to do what it needs to do, does need to break out, or it will become Netflix. Netflix looks like this. Frankie, that's hilarious. So Frankie had a great Halloween joke, and as a dad, I love dad jokes. This is a great dad joke. So he says, what do you call a chicken that haunts your house? A booster. That's funny. Okay. That's a dad joke, though. Are you a dad? Definitely. There's Netflix, though. Netflix back up here, retesting XA level, and rejected, and went to target 2 perfectly. So really the type 2 for Netflix, maybe another 437.58, but that's the kind of thing that when you see this thing stall out, when you see price action stall out in the pattern zones and generate confirmation and then hang up there like a curveball, for anybody who's played baseball, you know what a hanging curve means. It means you hit the hell out of it. It's getting ready. It's set up to get whacked. Just keep an eye on it. And these zones have been, I don't know, they've just really capped the whole run from last year, in some cases perfectly. What's up, Vlad? What's going on, Breaks? Hassan, how you doing? How do we find, Hassan's asking, how do we find exactly the B point? Do we use the wick? Do we use the range? Listen, that was, just not to get too off topic, but that was probably the number one breakthrough discovery for me. Because listen, I didn't invent the M and W idea. The M and W formation pattern that comes from people like Arthur Merrill and Edward Levy. Those guys were from the 60s or 70s. Merrill did his book, Merrill Waves, he would call it. And he was basically looking at 5-point structures. For me, where I came in the 90s, yes, the 90s, was saying, all right, if you have a W formation, you get your X, A, B, C, D. Well, where's the B point? Tell me where the B point is, because that's your identifier. And if it's at a 50%, it means an 886. If it's a 618, it's probably a crab. It's, so you look for the clear high to low, but let the software do it for you. So Hassan, just get with the trial. It's the easiest way to go. And again, the trial's free, 2 weeks, and it's a kind of tool where it gives you an awareness of market structure, especially in times like these. It can be really confusing. The narrative is crazy as anything. Really, it's probably one of the hottest narratives, scary narratives, I think any of us have ever seen. And I talk to older folks. I've got friends that are older, much older than a lot of you in here. And yeah, we all say the same thing. It's like, this is the craziest shit ever. So you got to roll with it. We got to kind of frame out the price action. Got to stay clear in our head. Where are we within all of this F-stick mess? Netflix looks like this. Just so you know, you had all that, you had that crab pattern there. You're looking at that. You're looking at a lot of these in the same way. Here's the other thing that's interesting from a longer term level, which Netflix has got it, Tesla's got it. I'll get to it in a second. We are unable, folks, to get really inability to go for Netflix to go up to rally to new highs is a concern. And I'm watching Netflix. This just little reaction rally currently is really a nothing brainer. But boy, the first pattern I ever learned was Head and Shoulders. And it's not Head and Shoulders is not the greatest pattern in the world in terms of being able to truly quantify where the entry for the trade is. But it's, we can't ignore these kind of situations, that if this is a firm resistance where we are right now, if it's the markets, if it's if it's Qs or SPY or Tesla, okay, these levels are firming up and not acting in the really, if you're looking for a bullish move, something like Tesla here, longer term, all of the street technicians are now going to look at this. Here's Tesla, and you're getting stuff like this on your monthly charts. That's my concern. It has currently, we kind of have in terms of how I feel about this, it's like it's early 2000s. It really feels like that type of environment. The tech bubble, then you had 9/11, and then you had George Bush, who did what he did. Won't get into it, but you had a lot of topping patterns. Yeah, and it took a while. And Tesla, to me, is breaking down in spots where it's kind of reinforcing a lot of just the ugliness of the price action. And we had great bullish patterns a year ago. But it seems like now, thing to be really looking for if this stuff continues to break down, and I think Tesla's already there. We do the full return. Why not? I think this was a bat pattern anyway. Let me put all the patterns back on here. Yeah, Tesla was the bat pattern at 127. That was a great one. I mean, really, that and Meta and Microsoft, Amazon, Google, they had amazing patterns a year ago. Okay, now what did they do? They went in, they did a massive reaction, 2023, and now kind of rolling over. It's not constructive at all. Where we're got to look at what's the next objective. I think a full retest to go back and hit that bat at 127, that could happen if we do not turn around. All you really need, okay, keep sliding here. You're retesting some HSI support level that was supposed to be at 220, doesn't care. It slid under 200 pretty easily. I'd tell you this. Wouldn't be surprised to see this thing go as low as 177 and, just ride it down to where, pattern-wise, are we going to get these type 2s? This seems to be really a possibility now. The type 1 reaction that we have talked about since July is not developing in a constructive way, is the best way to think about it. It did the reactive move, but it's kind of leaning to become more. And in that environment, let's say we get rates to go above 530, these are the things we should be looking for. Because if that comes to fruition, then the follow through, the next leg of it all, will take you back to obvious levels. Who said WTC7? Matthew Miller. Yeah, really. I absolutely WTC7. Yeah, I you know, my friend. You know. I and I'm right there with you. Um, let's look at Amazon. Okay. Amazon, greatest stock of the last decade. What about this decade? What are we going to do with this? Because, come on back. Where'd you go? Hold on. What happened to my, 1 second. Let me change screens here. Let's get up Amazon. Because if this year, from January to July, if that was a reaction off of last year's patterns, then we got to recognize it quick. Here you go. There's Amazon. It was that big, deep crab. Big bat at 93. Now, okay, T1 sign, initial reaction off of the bat pattern. You're 132.44. I'm not worried about it here. I'm worried about Amazon doing something like this. You come up, you kiss 139.14 for the type 2 bat, and then you go. Is something like that. Seems to be coming together quickly. You have HSI that registered last week. Okay, that's good. But let's realize where it is within this trend. That's just return phase of a bearish pattern. It's going to be choppy. You haven't seen any progress above that 139 level since you hit it. What was that? 4 months ago? 3 months ago? Now we get back into the return phase. I'm looking for that big retest. It's only like 7 higher. Hit that 7 higher, and that could be it. Be it for a long time. So don't get yourself into a false sense of security that Amazon's not going to be immune. And go to the monthly chart. It's even better pattern-wise. It's a big bat on the monthly. Beautiful. I mean, last year was beautiful. But as much as we would want that to be an end-all, be-all pattern, it's just not how it works. Harmonic patterns give you the reaction first, then the return phase, then the reversal. That's the thing I'm looking for. If it's 139 or if even it's a retest up to 145 to retest that HSI, understand that we are finalizing that reaction phase on the monthly for Amazon. Okay. It looks like it could keep going forever. There you go. But I'm just wanting to kind of plant some seeds, quite frankly, and be aware that you got markets in a real tight spot. So eye on Microsoft, eye on Amazon, eye on Google. Because Google got rejected last week on earnings in such a major way that, and then you look at the monthly chart here. Okay, clearly it's going to be an ugly month, but weekly time frame, look, came up to the bat pattern. Maybe it's an alternate bat. Where's the daily? The daily had a couple crabs. There you go. So break it down. Look, we had a ton of levels. 138. Yeah, right. Everything there. The software is kicking out like 3 different patterns here at 138. And I mean, rejected on a dime. Come right back down. Still no confirmation, even though you're hitting target ones here. You did it in such a way where you just basically fell off a cliff. And there's nothing here to say that has stopped yet. So I'm really watching every day. I'm really focused on today's close, tomorrow, how we finish the week, and then if we get this breakdown, that kind of triggers the next phase. That's how close it is. I'm not really favoring too many long positions at the moment because a bunch of them have failed. Really, they've just kind of been eviscerated. And so there's a long way to go with this whole scenario. I think it reminds me of a couple of years where you looked at it. If it was 2000, if it was what are some seminal years preceding a bear? 2007 that I can remember. You know, um, not much for the last decade, but even if something like Disney, okay, Disney's another example where that just looks like a continued long-term downtrend. Go to the monthly here on Disney. There's not a heck of a lot in there. And so if we're going to break all this support, they're really fighting it. But I'll tell you what, Disney, any close under 78, any close, really a strong close under 80, then you shoot the BAM. And Disney's a one that for me, I held that as an advisor, and then I dumped it right at the top, just because it was back here. No, we're at 2007. I mean, it was nothing, but it was like 40 split adjusted, and it lost 50% of its value. This one's already lost 50% of its value. It's got something more going on here. It's just not constructive. Disney, and it hasn't done anything to prove itself that there's any reason to be looking at that as a potential uh, opportunity. It's just not there yet. Let's be aware of this. We are on a razor's edge. And no matter what, even if we get a couple of days, that's okay. A couple of bullish days here. I'm more concerned with kind of comparative monthly closes and seeing how that plays out going forward, because it's you're really scraping some things. Let's take a look at gold. There you go, XAU. Here it is. That's a monthly XAU chart, by the way. So you tell me. Ping-ponging between patterns. That's Philadelphia Gold and Silver Index. That's a place where I used to work. Well, not really work, interned for a summer. So they let me be there. It wasn't like I was getting paid, but it was amazing. It was an amazing little floor at the time. They traded that and the SOX and then local currency futures options. But right now for XAU, okay, we're just squeezed between this level. It's still a type 2 here, but I'm looking at some kind of resolution on gold. There you go. Yeah, it's better. That's a better one on the weekly shark. I'm still not there yet for XAU for your major buy opportunity. Okay. Right now, you're bouncing off some daily patterns. Right down around 105. I'd keep an eye on that. Maybe at 100. Okay, gold will give us an opportunity here. Let's look at the spot price on futures price. We had this big move recently up to 2000 off of the Gartley. Remember that? We were talking 1816, 1850 area. Okay, that's a reaction. So this is the interesting thing with gold. Okay, this is a reaction. That's it. Dare I say a short? Right now, I'm not going to be that bold at the moment because I don't really feel like it's not going to be a huge opportunity, but I'm not going to be surprised if this thing comes back for the 2, and that would be the launch point. You get one more retest back to 1846, then I would say harmonic support confirmed. Let's get a launch pad to get going. Patient with it. Just be patient with it, like that, with crypto, with all these markets. Let's just line it up. Let's be patient, but call it for what it is. A lot of this stuff is in a heck of a spot, challenging certain levels that I think we have to consider possibilities that we haven't seen, maybe a lot of you haven't seen in our lifetime. There's futures monthly chart, looks like that. The thing I've said about with gold, where the acceleration phase for gold, and you could even wait for the breakout, is clearly close above 2100, because then it becomes an all-time ABCD, 2750. Trying to get into here in that range, okay, you're going to go through a lot of sideways action, which it has. We've traded between 2000 and 1700, 1600 for 5 years. But we get that pop breakout like this. You're going to shoot the gap and run it. I would prefer to see one more retest to 1846 and then do that breakout move, just based on the Gartley pattern itself. But a lot going on. What's going on, chat? Great to see everybody in here. It looks like more of the crew has showed up. How about AMD earnings? Yeah, we can go there. Disney has an hourly bat. Thanks, Street Shark. But I would basically sell any pop on Disney. So that's where we're at. Let's go have some fun over in crypto really quick. Let's look at Bitcoin. Because this is a constructive chart. And I've said this for a while that, look, you got a series of long-term higher highs, higher lows. The trend is up. Forget about 65,000. You're not concerned about that. You're not concerned about this. Okay, you're concerned about this. And going forward, and then looking left when we're a year or 2 years from now. That's a monthly chart. Right now, vacillating at 34,000 and change, still looking for BTC to finally get to the 38,000 target one objective. This crab, 38,764. I'll say it now. Okay, we'll get it by Christmas. Get it before the new year. It's at 38,764. Even if we have a little pullback right now, which we might go sideways, after the big rush, 30 days, we will clip that 38,764. What we do up here will really be telling. One way to think about crypto, folks, especially for the crypto, the crypto people who are just almost solely crypto, it's like, how do you avoid the FOMO? Look how, oh my God, Bitcoin's doing this amazing thing. How can I participate in that? Like, I got to buy it now, right? Like, we weren't ready to buy it. We weren't ready when we had the type 2 of the bat pattern. Where'd it go? Oh, there it is. Yeah, so when we had the T2, didn't look great. But it was a T2, and we were saying maybe we get back to 29,000 on that bat. Well, now, oh my goodness. Kind of lost it. I missed out. No, you didn't. Because Bitcoin is going to give us plenty of opportunities along the way. Just be patient with it. And one of the easiest things that, I always do is get it on the radar If you're not participating, I am in Bitcoin, I am in XRP, Cardano, Fetch AI, a couple of these I've mentioned throughout the last many weeks. I said to you guys back in September, I started a not huge, but a sizable XRP position and Cardano position, holding BTC for a while, probably will add. But the easiest way for me to say, let's give it time, go to the inflection point and project it 30 bars to the right. And just assume that you're going to have to give that 30 days, 30 bars, whatever the time frame is. You will get some kind of pullback. Maybe it's to 32,000. Maybe it's even more, or maybe it's only to 34,000. But this is where harmonic pauses come to rest in that window. And then beyond there, we should see that resumption. So that puts you basically end of the month, and then don't forget the amazing correlation of whatever it is, the seasonal equinoxes. And I talked about September 21. Remember that? Go back and look at the sessions. We talked about Bitcoin and crypto in general. And this isn't really even astrology. It's just some kind of observational cycle phenomenon that I've picked up on, where crypto loves to do these inflections right around the equinox. So September 21, okay, hit it, look for some change in action, bang, it went. Conversely, we could run up into December 21, which I think we can. I think we could get to that 38,700 level by December 21. And that would be a temporary inflection. So just be aware of that. And this segment that started right around the 21st of September, okay, should get us into the 21st of December. Much like we had back in the summer. Look, there's June 21. Okay? That's the summer equinox right there. I don't know why. And again, I'm not a fan of astrology, and I've known some guys that have done what they call financial astrology. Arch Crawford was a personal friend of mine a long time ago. And, these guys would like to call certain market timing dates. Well, that definitely holds true for Bitcoin, crypto. So I'll just look at that window and say, yeah, I wouldn't be surprised to say by December 21, we get to 38.7. Make sense? Hope so. And yeah, Evan, wait for the pullbacks. Wait for your hourlies. We will get oversold conditions on hourly time frame, because there you go. Perfect example. Bullish bat, high level bullish bat that formed off of the top, consolidating. If you got back to 33.4, that would be a high level continuation. That's the kind of pattern you want to see. And also, if it's difficult to not FOMO, simply just look for the T2 designation. I don't care where it is. There's T1, did the reaction, maybe we'll come back, generate a T2, and then we launch. But BTC, crypto, is a story for next year, and it is playing into the scenario I have been laying out since the summer, that we want to create positions in October, November, into the end of the year, and then ride the hell out of those positions throughout next year into 2025. And we see it. Some of those other ones. Let's do a quick top 10, and I'm going to introduce a new crypto into the top 10 or top 5. Solana. Loco. Now, you guys are going to hear something from me that's a little unexpected, but I think Solana is overcooked at the moment. And that's good because that'll set up an opportunity for later. But again, you go back to say, there's your daily time frame. We are back-to-back patterns here, and we are back in that zone. 3384 is the hop level up the small deep crab. You got some confirmation. It's just a little overshoot. We could go as high as 40 and still have consolidation. But let's bring this out. Let's go to where's the Binance chart? Hold on. Let me get all the data. There you go. So the way I'm thinking about crypto, and how do we know which crypto to hit, where to hit it, what to hold, and where it's going to go. And I keep saying, a year from now, you're going to want to say, I got into crypto because I had massive patterns looking left that had bottomed, confirmed, and gave me clear targets. What happens beyond those targets is up to you. I just want to treat them as a minimum. For me, Solana, mostly on this Binance feed, okay, it did give you this massive shark pattern. And it's even generating a little Gartley at the moment on this is a weekly chart. And that's fine because let it do its consolidation, let it do its zigzag kind of behavior. But just know, we crack above 40 on Solana. That will set it free. That will spring it, and it'll do a type 1 shark to 50 to 140. Now, there was that crazy report that came out. Someone said, oh, yeah, Solana by 2030 will be 3,000. And everyone jumped on that. And, here we go again with crypto nerds manipulating price action. Where that got Sam Bankman-Fried. And it is what it is. Expect it. Expect the narratives and manipulation to continue by other unscrupulous actors. But this is where the patterns give us the levels, the navigation to get through the craziness. Because it's going to get crazy. It's, there's several thoughts about what's going to happen next year. Not necessarily good, but we just have to go with it. The rampant spending, government spending, deficit spending, war spending, this stuff's not going to continue. It is going to continue. It's not going to stop. Now, that will play positive into assets like Bitcoin as these guys continually destabilize the financial stability of the United States, quite frankly. Don't care. We have to use that to our advantage to define opportunities and go with it. I've been saying to people, seeing the way that this debt crisis and the government spending money, it's kind of like watching a car run into a wall or a head-on collision. There's nothing you can do about it, but stay out of the way and strategize accordingly. For something like this with crypto, our levels are clear. Okay, and if that's going to be a driver for Bitcoin, and we need Bitcoin to be the driver for the rest of crypto, that's how you get these kind of moves. So for me, I'll be patient on it, and I'll give you guys a heads up when I go. I probably would play the breakout for Solana more than trying to screw around in here and be like and chase it in a FOMO way. But it's obvious. And patterns like this remind me of 2018, 2020, where you had massive patterns, almost unbelievable patterns, that yielded the big cycle move. So check that out. Be aware of that. Now, I did let you know months ago about XRP, what I thought about that, especially after the first massive move. And we talked about this yesterday. We traded above 60 cents. That's a great next step in the process here. where I've got this lined up as a target 2, 134. Mechanically, 134. Why? Because it's a type 2. Now, with all the different data feeds on crypto, which has been something that's kind of it's a pain because you have slightly different sets of data depending on who your broker is that maybe generate slightly different pattern matches, pattern results. A lot of these are bat patterns, okay, where you hit the 886. But then I come across the perpetual contract on the Gartley on Binance weekly. And these are all about the weekly patterns. It's the weekly action, which you want it to be. This is exactly the kind of pattern we want looking left going forward. My thought is this. If this is a Gartley, which I think at a minimum we can say it's a Gartley, other data feeds are showing a bat pattern. I'm comfortable with the Gartley here because you do have your A to B and C to D dynamics. What does that mean? Well, it's just a pattern. It's a sine wave, a corrective sine wave that says the minimum correction of that move is done. Not to mention, okay, we did the perfect type 1 move. I mean, it was exact. And we saw that even if it was a bat pattern on the other feeds, the Gartley makes sense. And the Gartley at target 1, 96, and then getting rejected, that's not a bad thing. In fact, that's a good thing. It almost adds to the harmonicity of the potential for the type 2. And now you have confirmation. We got a yellow dot. What the hell is a yellow dot? Yellow dot is our HSI confirmation dot. It's related to Harmonic Strength Index itself. It retested XA level, so by definition, structurally, we are at a type 2. The only reason why the T2 didn't generate is because we are too many bars. And I'm going to probably look to adjust that. It was something when we updated the software and we brought in the T1 and T2 auto tracker. We set limits on how long we will allow the auto tracker to identify those levels. But I'm telling you now, and you guys know I've been saying this for a while, 47 to 50 cents was the moving support from a few months ago. That's where I started my position. I've been adding. I will add a little bit more to my members yesterday. I was super specific about what my financial objectives were on these kind of positions. But we got a yellow dot last week on Sunday, closed. Beautiful follow through. That's exactly what you want to see to start the process. And this will seem like it moves in slow motion because we want it to happen so bad. But it's going to take 6 months, a year or more. But that's okay. I think we could get up to target 2 relatively soon. But be realistic. It'll take a few months to get there. But we are initial phases and stages that just started Sunday night are there. So 59 cents doesn't mean much to me. I want to keep adding here. And I will. I'm about, I don't know, probably 2/3 of the way of the position that I want to secure. And then I will not touch it. And I think I've been actually trading these a little too much recently to where we are now. We need to get in there, slow accumulation, and ride that and just monitor week over week. We should start this process of a strong climb week over week, day over day, certainly month over month. What's up, Jewelry Affairs is asking, what's next after T2? I'm glad you asked that because I always like to talk within minimums with harmonic patterns. T2 is a minimum by the way. It's not a maximum, it's a minimum. And it would be a phenomenal trade if we got to T2 alone and then reversed, or, and that was it. Sure, that would be great. Almost a 3x, 2.5x. It's a great trade anywhere. But I always come back to the BTC example from a couple years ago. And that's like this. Go back. Where are you? Here you go. And we've had a few of these. 2018, 2019, we had a massive bullish bat. Okay? The bullish bat set us up, all the things you want to see, looking left, and this is what I mean about looking left, where you have a pattern. And people are saying, oh, Bitcoin, I just remember all of the talk about Bitcoin saying, oh, it's 4,000. And then other people saying, oh, it's worthless. This is a total scam. And that's where you have to separate your brain from the narrative, from the double talk, and just analyze what's there and what we have to deal with. Here's a great example. Type 1 reaction, right to target 2. And in this case, it came back down. I'll take Bitcoin and the rest of these within the reference of from XA level to the measured target. But we know what to expect if we explode beyond the minimum. And that is something where the cycle resets into a whole new move. And I think with the way everything is shaped up, you had a government that literally tried to run this stuff, basically run this industry out of the country, and they were not successful. Okay, created a hell of an opportunity, and I still say the market is at the crypto. A lot of the cryptos and your top market cap cryptos there's still an opportunity. So just because we had one pop doesn't mean you missed out. No, just settle in, laser focus, but it's more like this kind of a deal where I'll be looking for that action above target 2. We get that breakout, follow through. It will take maybe a week, 2 weeks to tell me if this is going to be a new cycle move or that's it for the type 2 move. Either way, if we're looking at XRP or even Bitcoin for that case, unfortunately, Bitcoin doesn't have the beautiful weekly patterns as daily like XRP does and a few others. But if I'm going to look at XRP in terms of where it is, I would say it's something like here. Okay, you've completed the pattern. You're probably, because it's more you're really at the type 2. I'd say it's like there. Okay, and you're going back to the target 1, and then you're looking for more. Not to jump the gun and assume, hey, everything's going to moon. But this has been the repetitive cycle. And the other thing to consider, minimums. Just thinking minimums, harmonic minimums with any of these, that your cycle move is going to be a 1618 in the form of a crab or whatever. And then let the rest beyond the measured level be gravy. You strategize to get from here to there or there. I mean, it's really utilizing that former model, utilizing what Bitcoin has done in several cycles. I'll go to 2016 in a second. But Bitcoin, fundamentally, yeah, you got me. Fundamentally, I'm all in on Michael Saylor's, what he's talking about. It's kind of difficult to chase something that's, has done the move that it's done, but from a market cap perspective, it's happening. And Bitcoin, okay, If I can recognize where I am on the map and think of it as a measured map, then my minimum objectives are still higher. My minimum maximums, meaning, I would expect anything that is going to do a big move, break out to all-time new highs, it'll do a 1618 move. That's the definition of an extreme cycle. Harmonic impulse wave. That will get you really to it'd be a heck of a move for XRP, but it's the same kind of logic. And now let's relate that to XRP one more time of where I think that could go. So there's your big patterns. Let's say within the all-time structure, it's like this. And I showed this, I think, last time. Now, depending on your feed, again, here we go with the variable data feeds. But even if our minimum assumption is that this is some kind of all-time bearish Gartley, because B points at a 618, come back down, you go back, that's 250, 260. Okay, and I said this last week, and I think it's important to be reiterated, that it's not easy to recognize that, wait a minute, what? We're down here and it's going to go there? Well, then that's an amazing opportunity. Yeah, what's missing here? Time. Time is missing. But the possibilities are quite clear. And what's the unthinkable minimum maximum is that then it becomes something larger, like a 1618 cycle move is like there, 540. So that's the way I'm strategizing this. And again, it could take all of next year into 2025. But the march has begun. Don't miss it. Okay, XRP is one of my favorite. Why? Not because I care about the coin, but it's a top market cap play. It's, they beat the whole SEC garbage. So there's a lot of artificial depression in price because of that thing that has yet to catch up. And then the whole spot ETFs that are going to come, because you'll have BTF, you'll have a BTC ETF, you'll have a Ethereum ETF, you'll have XRP ETF, and then here's Cardano. So Cardano has forever benefited, I think, from good press. Quite frankly, I never really thought it was a major player, but let's get that other. I'm focused on it because it is a top market cap play. And this is another one where down at 25 cents, here we go. We have a deep crab, 25.5. Okay, took some extra time, but we did the breakout. We got above the trend line. Still early here, and if you're wondering, okay, I missed Cardano, how do I know where to get into? Look at the zone. Your XA level is 28.4 cents. That's a great place to start. That's an absolute measured level where, hey, I'm just not throwing a dart here. I'm looking at that XA level at 28.4 as a structural minimum. Let it come back, retest it. Looks like we'll do that. You traded above 30 for a little bit, getting a little overbought. That's okay on the daily, but let it come back down. And this is, from a static technical analysis standpoint, really at a spot where you're going to come back, you violate the trend line, then come back, retest it, that support one more time, and then you go. And my target for Cardano, 46.5 cents minimum. Why? That's target 2 off the crab. If something develops that's much larger than that, yeah, we'll see. Possibility for Cardano to retest a harmonic range. Pretty simple. Again, let's not overthink it too much, but within the scope of that small pattern, you have a few things here. But even if it's just a dead cat long-term bounce, 382 is $1.34. So, got to ask yourself, okay, is crypto going lower? Is this crypto cycle, are they going to run crypto out of business? They tried. They weren't successful. So now what? Well, we're in the early stages of this thing putting together the constructive price action it needs to launch off of a base. Also, static TA. There's your low. There's a secondary higher low. And now I think you get a small, maybe 50% pullback, some kind of nominal retest, and then you go. So for Cardano, that's around 28 cents. I would, start jumping on that. If you're not in there, I will add more to my position and look to ride that at least to 46. Again, the question was, how do you know it's going to go above target 2? You don't. You take it when it gets there. But when we position here for a target 2, which is generally almost a 2x, I mean, that's the minimum. The heck was that? Uh-oh. Did I lose you guys? Hold on. Let me know. If I lose you guys, let me know. I think I just heard a converter explode. Seriously. Give it a second. No, I think we're okay. Yeah, we have a crazy electrical situation here, and I'm South Miami. I'm just north of the Keys, and sometimes their electric goes out, and that's why I went all solar. Which we should talk about some of those solar stocks. All right, one or two more. Let's get this crypto deal wrapped up. Ethereum, surprisingly, look, Ethereum structurally has not been nearly as nice as the others, and you see it. Okay, static between 1600 and 1800. I don't expect that to change. It is a type 2 off of that Gartley from, a year ago, but nothing to suggest that that's ready to blast. So I don't think we should assume that just because Ethereum is a top 5, that they are all going to rage in the same way as something like maybe an XRP or even a BTC. You're going to get some dichotomy here, where some are going to be feast, others are going to be famine. I would want to see Ethereum generate some kind of structure, secondary pattern to launch. And that's the thing also, that we're looking for signals in the price action where we get the acceleration, not so much the sideways kind of consolidation move that we've been dragging through on a lot of T coins, S coins for the last year. I do think it's interesting. I showed the GBTC. Today I want to show the Ethereum ETF there, the Ethereum Trust, where this is a little more telling. We have this a bearish bat, but more importantly, you had patterns down here that you couldn't quite see in the crypto itself. So you have this big shark pattern, hop level at 727. That's a floor for sure. Maybe you come back down on Ethereum and retest this range, but really interesting that these vehicles are showing us the patterns that the spot price isn't. Let me go to Is it weekly or monthly? Weekly. I'll show the GPT in a second. But there's the shark. Hop at 7 and change. I know I've gone through this before. We went through this a long time ago when crypto started to move. And even though Ethereum hasn't done anything for most of the year, doesn't mean that it's not. So if I was looking at the ETH, the grayscale ETH, my target one would still be up here around 29.56, maybe $30. So I'm looking at that. Look at the GBTC as well. This is probably the most beautiful, probably a candidate for Harmonic Trader Volume 4. No, I'm just joking there, but this is the definition of having patterns looking left. There's GBTC, Gartley. I've showed this to you before. Target 1 at 29.61 that's a minimum. Okay, and that doesn't change, and that should happen. I would expect to see that by the end of the year. But that's a beautiful pattern. That's how we know we have something on this consolidation. And even from a larger perspective, we've seen it before. Even the GBTC 886 retest and then go. 886 retest and then go. And ultimately, yeah, you go back and you challenge all-time highs. Hey, Mark. Yeah, nat gas is exactly where I'm going next. So thanks for bringing that up. A couple more. You guys want Chili's? Okay. Chili's is a definition of T coins, period, that we were looking at 11 cents. And we caught that last year, and then it went up. There it is. It did the target type 1 move, and then came back down and floundered. I think with those kind of T coins, you're just going to have to wait them out. There was a deep crab. We were done with that at about, I think, 23 or 20 cents, something like that. And it came all the way back down, and I was saying, yeah, somewhere around 11 cents. Well, failed. What it is it's the hop at 5 cents. It never broke out of the downtrend line. Now you did. So 5.4, okay, I would look at that. But I think there's other better vehicles. I mean, Chili's is one of those. If it's Chili's or Doge or, God forbid, Pepe or whatever, those are all speculative, throw your pocket money at it kind of a thing. I would be more inclined to favor those larger projects that have real real use case, and I don't even know how to define that for you. I mean, things that are going to get adopted. For me, it's usually about market cap and patterns. Be a big market cap, have a real constructive behavior to it, like the Bitcoin thing or the XRP. Those are more of the ideal scenarios. Let me give you guys. Here's something. Okay, this is an example of the kind of patterns that, hey, I don't know anything about this Fetch AI other than had a beautiful pattern, 18 cents, deep crab. And now we're going the other way. We hit target 2. Just so you know, okay, if you're in Fetch, don't be surprised to see this thing pull back. Maybe to 30 cents off of the crab. But target objective has been hit off the first reaction here. Okay? So if we get that pullback to 30 cents on Fetch, that would be your next entry. That would set it up for the larger move to then not only do the return, but to take off. Just because we have a bearish pattern doesn't mean that it's a bad thing. I mean, like the S&P. Okay, we want to see that pullback come down. but you're at the edge limit. The same way we've got SPY or the Qs, they're sitting on the edge. They have to turn here. You have to see some kind of stabilization. You've got crypto doing a similar deal. Fetch AI. Oh, the other one I posted was this AGIX. People were asking me, well, great, what do I do with this? It's a little late. Where do I get in on this? Let me bring it up. There you go. It was a massive Gartley. Okay, right at 17 cents. And I was saying, no, wait for it. Wait for it to come back. But this is, again, the type of pattern when you're looking left, you're going to want to be basing your trade off of that. And the other thing, like a lot of the crypto from this year, we only broke out of the downtrend back in September. Ironically, right around September 21st. So treat that as a first thrust kind of a thing. I by in no means was I posted that at like 23 cents. And it's not a FOMO thing. Go FOMO in. No, just look for opportunities down here. I think it's around 20 cents probably. But keep an eye on that. I like that pattern. I like what's shaping up there. Those are the signs of where you understand you have the collective buying and selling of everything that happened in the last year has developed a matrix, a framework that is supportive going forward. We're saying this is the next continuation of the larger move. It's not going to happen right away, but we're positioning going forward against those levels. Couple more. XRP pumping right now. Oh yeah, it did that this morning. Oh yeah, check out XRP. It is pumping. But we're not surprised. I mean, don't be surprised by it. XRP is one of these ones that just because we're, doing the arrow shot, calling out the moon shot to 135 or 134 from here, that does not excite me. It's doing what it should do. A couple more. A couple of things that I think have not really, quote unquote, revealed themselves, but are starting to. Things like this sandbox, the metaverse stuff, and I, talk about super hype, but you do have massive patterns here. And you have confirmation that literally just came in on Sunday. So sandbox. Here's one that did run already. Rune. And I think it was a daily. Yeah, you had some patterns there back in August. And it looked like hell. I mean, these look terrible. And it wasn't long ago that these were, are they going to go to zero? Well, now they're popping. Not an easy, look, it's not easy to be able to risk your capital here and then have it do nothing for a year, which what crypto did, and a lot of people got frustrated, only to have it now finally show itself. But let's translate that into other opportunities. Rune here is actually a type 2. Hop level, basically $1. And your measured levels are back at like 11, 12 bucks for Rune. If it's a viable market and breaks out of the mandatory minimums, where I wouldn't say no, but you favor those higher levels. What are the patterns sticking out? What are those levels showing you? What are the possibilities for some kind of crazy run for Rune? Sandbox is another one. Decentraland. Okay, the first time in a long time, these are printing patterns. And it was, big surge. Yeah, that was amazing. It did a huge move beginning of the year, but up and all the way back. But what's going on now that wasn't there before? Big patterns. Hitting a little resistance. If you want a number for mana, it's 34.75 cents. You come back there on this little correction, you can start in. So be aware of that. One or two more. Matic. I've mentioned this. We got patterns looking left, and that's what I want. I want patterns looking left, like that butterfly. You're at 63. Okay. We come back down into the 50s. I'm good with it. But go through. Again, this is why, you folks, you need to get the software, work through all of your crypto, or even if it's just Bitcoin that you're interested in, we want to be lining up with the patterns for this allocation cycle that it's about to come. Now, before I get out of the way here, there's two other charts. I haven't looked at total in a while, and total has been totally impressive. It did what it was supposed to do, okay, which was hold target one at 972 billion. Now you're back up here at 1.25 trillion. Great. Does it mean anything? Not yet, but we know where it takes on a new character, and that's above 1.3 trillion. So we take out these patterns. We know this basing is done. It's over with. And I think even in a be conservative, minimum conservative move is like this. You get to say a 50% correction of the bear market. It's just standard TA ratios, a bear market rally. And that's just being the most conservative, gets you to 1.87. Maybe as high as the 618. So be aware of that. Final crypto chart I want to show, and I can't believe it's already been, I don't know how long we've been here already. I'm looking at USDC market cap chart. And maybe it's a little misleading, but I want to see money flow back into USDC. That will tell you how it sets up of just getting more money back into the crypto market. USDC total market cap has been in a correction since 60 billion, and I want to see this thing turn up. You want USDC to expand, to increase. So just be aware of that. You want money to flow back to crypto. This is all about that allocation cycle. All right, let's get to a couple others, and then I got to get out of here. Been a great day. I can talk about Doge another time. Yeah, I did basically 25x on Doge last cycle, and we'll bring that up on Peckham, if that's your name. Yeah, bring that up on Thursday. Let's talk about that then. But let's look at a couple other key long-term markets. So here's nat gas, and I'm just going to go over some singular things where it's kind of like crypto, but this is now interesting. For me, nat gas was another one that we caught in 2020, and it was a hell of a run. And it went pattern to pattern, came back. So now it's a type 2. Take a look. We're at target 2 with confirmation. Why hasn't it moved? Well, it's nat gas. But you've broken out. Your 3-bar breakout, really. And the 3-bar is an important consideration. It's like a sign in the price action. Even this, that candle, that big candle was not a 3-bar breakout. No. There's your first 3-bar breakout since the downtrend violation. Okay, UNG 752. I'm watching nat gas, which is a little different than crude oil, but nat gas is at a point where it's been decimated. You're buying it on a correction. You don't expect much. You just sit on it. And I'm talking, come back a year from now. Okay, we should get into some seasonality with nat gas really soon, but this is definitely a chart I want to call out. I think the monthly, where's the monthly there? Maybe it was the spot price on the monthly. But you're at massive long-term support. There it is. Come on, where'd you go? Down there at $2 is the floor. But you're having a big follow through today. So just be on the lookout. Nat gas is going to be a sleeper move. Definitely going to be a sleeper move. Let's see here. One or two more. Just to highlight some individual plays, in my opinion. What's up? Let's look at AMC. Okay, AMC is another individual play that there's a lot of chatter about it. It's trying to pop, make a move. I've mentioned this before. Oh, look at that. Yeah, you're getting that follow through. So, a whole bunch of controversy around AMC. People are looking for the squeeze. AMC is one of the big ones that really got us on the map. I'll have to show maybe next time because we've gone so long today that we had. I remember just tweeting bullish everything at $2, and it went, and that was before the split. Here's the deal for AMC. Why I tweeted out that I think this is ready, and it looks like it is. It's a type 2 crab. Okay, and your terminal bar is still $14, so you're under the zone. But just recently, you generated yellow dot confirmation. Looks like we're trying to make that move now. We had a 3-bar breakout before then, and this is, I think, despite all the hype and all the nonsense surrounding this, this is massively oversold, overcooked. That we're doing the kind of constructive behavior to get out of the zone. Okay, so you want to speculate, you can go right ahead on that one, by all means, because we will recapture, maybe as high as $35. We get a move that can pop. Where's the logical next level resistance, or just even retest half of that down that capitulation bar? 25. So I'm okay on that. If you want to go and, like I said, throw some pocket change at AMC and then see what happens, that's the best way to play it. Now, for things like this and things like crypto, I do this a lot with options, okay, because things can get super crazy when you're speculating in vehicles like this. The easiest way to handle it is when you get to a double, you sell half. Just sell half and let the rest ride. And that's something I'm thinking with crypto. Maybe I'll talk more about that next time. But, things like this, yeah, you can speculate on. They're looking like they're in a good spot to do so. Someone asked me about AMD, and I want to show you what AMD looks like. AMD is a 3 ideas for my folks. And again, just because I'm concerned doesn't mean I'm bearish. If we get the breakdown, yeah, I'd be really concerned. I think there would be larger consequences. What I'm saying is we're right on the bullish edge. AMD is an example of that. You got a shark off the top, 95 to 97. I've been saying that for weeks, and we are responding. We are turning. So short term, and that's really all I want to look at any of these. I'm constructive on that. They've got the earnings are tonight, right? Yeah, earnings are tonight. So certainly watch that, focus on that. But there are opportunities here in stocks like that. I'm thinking, okay, the next few weeks, and then longer term consequences beyond that. I'll make a reassessment. Like as I started today on Nvidia. Okay, Nvidia has to turn. SMH, semiconductor index. That's another one that has to basically turn here. You need to see this thing bottom on SMH, basically where it is. The weekly looks like this on SMH. This is the problem I currently have because we have a back-to-back weekly. There was the bat at the low, and we went right back to form a bearish bat. So we're ping ponging here from level to level. I don't have anything just yet on SMH that would say that's overdone at the moment. Okay, so anything that I'm assessing on the long side is more a quick swing style trade. All right, one or two more, and I have to get out of here. But I appreciate you guys are great. Thursday we'll give away some gold memberships and maybe a book or two. Yeah, I did XRP. I did Solana. Check the earlier here. Check all that stuff out earlier. We did pretty good run through. Maybe I'll wrap up with this one, which I think is super safe. Kind of here you go. Coca-Cola. So Coca-Cola is one I've been looking at for a while. And it's another one that's scraping the edge right at 52 to 55 bucks. Looks pretty good. But if you really are concerned about the market, stocks like Coca-Cola would break down here. Okay? Not there yet. I mean, this has been real constructive. It looks like a clear type 2. We have T2 designation, but it's going to take time. We do have a lot of patterns here, but we have to hold. I mean, you have to be in this typical cycle where we make lows in October and we confirm them in November. That's what we should be thinking here. It's got a lot of work to do between now and basically Turkey Day, but that's what I'm thinking. You're scraping the edge right now. You need to see progress immediately. All right, listen, let's talk more about that on Thursday. You have any questions, get to me on the Discord. Send me an email. We'll give away a couple books. I have a couple books. I guess people still read. And we'll see how crypto proceeds from here and the rest of the markets. It's going to be interesting. Okay, folks, thanks so much. Until then, as always, go get them. We'll see you on Thursday.